Welcome to Training for Volunteer Income Tax Assistance, also known as VITA, Session 4, IRS Form 1040. This training is presented by the Franchise Tax Board's VITA trainers. Hi, I'm Tara.
And I'm Pamela.
The Franchise Tax Board is proud to offer this training series for the upcoming filing season. We have created these training videos with California VITA volunteers in mind. This is the 4th out of 13 sessions, and we hope you find them helpful as you work on your VITA certification. If you have any questions, please contact your local VITA coordinator. You may also reach out to FTB's VITA team at 800-522-5665 or by email at volunteercoordinator@ftb.ca.gov.
Okay, let's get started. In this session, we will cover the flow of the IRS 1040 tax return. Throughout this session, we will refer you to different publications. Even though the TaxSlayer software does a lot of the hard work for you, it is important to become familiar with IRS Form 1040. This is key because when preparing returns, you will complete the federal tax return before creating any state tax returns. We will be using the current draft version of the 1040 as the final version was not available at the time of this recording. Please keep in mind minor edits may have occurred since then. At the top of page 1 is basic information about the taxpayer and spouse. If applicable, this includes first and last names. Names must match the Social Security number or ITIN number, Social Security numbers, mailing address, filing status, and some additional information used on the return. Dependent information will also be included on page 1 of the 1040. You will need the following for each dependent: full name, Social Security number, relationship to the taxpayer, if is a full-time student and live with the taxpayer, and if qualifies for child tax credit or credit for other dependents. Although the personal and dependency exemptions have permanently been suspended, the ability to claim a dependent can make taxpayers eligible for other tax benefits. For example, the following tax benefits might be associated with the dependent: head of household filing status, child tax credit, other dependents, earned income tax credit, child and dependent care credit, and other tax benefits. In order to claim a dependent, the dependent must be either a qualifying child or a qualifying relative. The rules for qualifying child state that they must be the taxpayer's son, daughter, stepchild, foster child, sibling, half-sibling, step-sibling, or descendant of any of them. Must be under the age of 19 or under the age of 24 and a full-time student, or any age if permanently and totally disabled. Must have lived with the taxpayer for more than half the year. Must have had to provide more than half of the child's total support. The rules for a qualifying relative state that the person cannot be the taxpayer's qualifying child or the qualifying child of another taxpayer. Can be a relative of someone who lived with the taxpayer as a member of the taxpayer's household all year. Must have gross income less than a predetermined amount for each tax year. Refer to publication 4012 to verify this limit. Must have provided more than half of the qualifying relative's total support.
Before we talk about the different line items of the 1040, let's review some terms. Gross income, taxable and non-taxable income, earned and unearned income. Gross income is all income received in the form of money, goods, property, and services that is not exempt from tax. As a preparer, you must determine whether the taxpayer's income is taxable or non-taxable. Income that is taxable must be reported on a taxpayer's return and is subject to tax. These items can include wages, salaries, bonuses, alimony for divorces before 2019, self-employment income, gambling winnings, and more. Non-taxable income is income not subject to tax. Some examples include aid to families with dependent children, AFDC, child support, supplemental security income, SSI, veterans benefits. Some forms of non-taxable income, such as non-taxable Social Security benefits and tax-exempt interest, may need to be reported on a return. Publication 4012 has an income quick resource guide that can assist you. Now let's look at the difference between earned and unearned income. Earned income is any income received for work, such as wages and business income, and self-employment income. Unearned income is any income not earned from work, such as unemployment, interest and dividends, pensions, and Social Security benefits. This information is used when determining eligibility for credits such as the Federal Earned Income Tax Credit, also known as EITC.
Now we'll go line by line and explain the 1040 so you'll have a better understanding of the return. We will be covering all line items on the 1040 that are within the scope of the VITA program. Let's start with lines 1 through 7. Line 1, wage-based income. Line 1 of the 1040 includes 10 sublines to separately report various types of wage-based income and include income not reported on a W-2. Line 2, tax-exempt and taxable interest. Interest earned is reported to taxpayers on Form 1099 INT. Tax-exempt interest may include state, local, and municipal bonds. Although this income may not be subject to tax, it must be reported on the tax return. This is generally located in Box 8 of the 1099 INT. Taxable interest income can be earned on items such as checking or savings account and can be found in boxes 1 or 3 of the 1099 INT. Line 3, qualified and ordinary dividends. Both types are reported to taxpayers on Form 1099 DIV. Ordinary dividends are distributions paid out of the earnings and profits of a corporation, and qualified dividends are dividends that qualify for lower long-term capital gain tax rates. Line 4 and 5, individual retirement accounts or IRAs, pensions, and annuities will report their distribution to taxpayers on Form 1099-R. Generally, the form will include the gross distribution received by the taxpayer in Box 1. The taxable amount may be reported in Box 2A, but there is other information taken from the form that may be used to determine the taxability of the distribution. For instance, Box 7 will include the distribution code, which will help to explain the type of distribution. Refer to publication 4012 for more information. Line 6, Social Security benefits. Social Security benefits are reported on Form 1099 SSA. Some taxpayers may also receive railroad retirement benefits treated as Social Security, which are reported on Form 1099 RRB. A portion of the benefits may be taxable depending on the taxpayer's other income. If Social Security is the only source of income they receive, the benefits are not taxable and they do not have to file a tax return. You may have some taxpayers who will want to file even if they have no filing requirement. If a taxpayer is receiving other types of income, such as wages, pensions, or business income, it's possible that up to 85% of their Social Security benefits will be taxed. Line 7, capital gains or losses are reported on Schedule D. Taxpayers who buy and sell stocks, bonds, or real property may have income to report by taking the sale price minus the adjusted basis. If the taxpayer is reporting a loss, up to $3,000 may be deducted, and any leftover amount of the loss will be carried forward until it is exhausted.
Line 8, other income, from Schedule 1, line 10. Other income is located on Schedule 1, Part 1, additional income. Line 1 is where the taxable state refund will appear. Your taxpayer will receive Form 1099-G with the amount of last year's refund. If your taxpayer used the standard deduction or took the general sales tax deduction when itemizing, then their refund is not taxable. Line 2A is alimony received for court-ordered alimony payments. Again, this must be court-ordered and does not include any child support payments received. Enter the date of original divorce or separation agreement on line 2B. For more information, refer to the 1040 instructions. Line 3, business income or losses is to report net income from a business. The net income is calculated on Schedule C, where you enter the business income and the allowable expenses must be attached. Line 4 and 5 require additional certification, which we do not cover in these training sessions. Line 6 is add a scope for the VITA program. Line 7 is where unemployment income is reported. Also, any unemployment repayment will show as a negative number. Line 8 is a catch-all for any income not reported elsewhere. The most common types are gambling winnings reported on an IRS W-2G, such as casino winnings, game show prizes, or lottery winnings. Form 1099-C, or cancellation of debt income, which is taxable income from the forgiveness of any debt that the taxpayer may have. Also included on line 8S is an adjustment for in-home support services, IHSS. When the care provider and the care recipient live together in the same home, they are allowed to subtract the payments received from income. The income is originally reported on their W-2 and treated as wages, but a subtraction of these wages will appear here. Line 9 will have a total combined from line 8A through 8Z. Line 10 combine lines 1 through 7 and 9. Enter on Form 1040, 1040SR, or 1040NR, line 8. Part 2, Adjustments to Income. Lines 11 through 25 are for expenses allowed to be subtracted from gross income, also known as above-the-line deduction. Line 11, Educator Expenses. Eligible educators for grades K through 12 are allowed to deduct up to $300 of classroom expenses, such as paper, pencils, and markers. If both the taxpayer and their spouse are teachers and file a joint return, they both are allowed the $300 deduction for a total of up to $600. Line 12 requires additional certification, which we do not cover in these training sessions. Line 13 is the Health Savings Account, or HSA deduction. Line 14, moving expenses for members of the armed forces, requires military certification. Line 15 is a deductible part of the self-employment tax. Self-employed taxpayers are allowed a deduction for 50% of the self-employment tax reported on Schedule 2, Form 1040, Other Taxes. In Session 7, we'll talk more in depth about self-employment tax. Line 16 requires additional certification, which we do not cover in these training sessions. Line 17 is for the self-employment health insurance deduction reported on Schedule C. Line 18, penalty on early withdrawal of savings. This information will come directly from Form 1099 INT and is reported when entering the interest income information mentioned earlier. Line 19, alimony paid to a spouse, which is deductible only if it is court ordered. See 1040 and 1040SR instructions for more information. The taxpayer will be required to provide the recipient's Social Security number and original date of divorce or separation. Line 20, IRA deduction. A deduction may be taken for contributions made to a traditional IRA account. The limits may change each year. TaxSlayer will calculate the deduction amount for you based on the information entered. Line 21, student loan interest deduction. Taxpayers are allowed to take up to $2,500 of interest paid towards qualified student loan debt paid. This is capped at $2,500 per return, not per person. Line 22, reserved for future use. Line 23, Archer MSA deduction, medical savings account. Lines 24A through Z, other adjustments. Line 25, the total of lines 24A through Z. Line 26, add 11 through 23 and 25. These are the adjustments to income. enter on Form 1040 or 1040 SR, line 10, or Form 1040 NR, line 10A.
Now let's get back to Form 1040. Line 9, add lines 1 through 8. This is your total income. Line 10, adjustments to income. This will be line 26 from Schedule 1. Line 11, subtract line 10 from line 9. This is your adjusted gross income. Line 12, A through E, standard or itemized deduction from Schedule A. If your taxpayer is itemizing, you will prepare Schedule A to determine the total deduction. This is discussed further in Training Session 5. On this line, you must also indicate if you or your spouse is claimed by someone else, is 65 years or older, and/or is blind. Line 13A is where a sole proprietor may be able to deduct up to 20% of qualified business income, known as QBI. Line 13B is any additional deductions such as tax on tip and overtime income, car loan interest, and enhanced deduction for seniors for Schedule 1A. On line 14, you will add line 12E and line 13A and B. Line 15 is the total taxable income for your taxpayer. This is the amount used to determine the taxable liability reported on line 16 before any credits are applied. Line 16, tax liability. This amount will be automatically calculated by TaxSlayer, or you can use the IRS tax tables to look it up. Line 17 is any tax reported from Schedule 2. The two most common items you may see in the VITA program from Schedule 2 are the excess advance premium tax credit repayment, which is located in Part 1, Line 1A, and the self-employment tax located in Part 2, Line 4. Line 18, add lines 16 and 17. Line 19 will include the child tax credit based on the eligible dependents or the credit for other dependents. IRS Schedule 3 is used to report non-refundable credits. A non-refundable credit is a dollar-for-dollar reduction to the tax liability down to zero. The child tax credit and other non-refundable credits are discussed further in Training Session 6. Line 20, carry over the total from Schedule 3, Line 8. Line 21, add lines 19 and 20. Line 22, subtract line 21 from line 18.
Line 23, other taxes reported on IRS Schedule 2, line 21. These can include self-employment taxes or additional taxes on IRAs. These taxes are discussed further in Training Session 7. Line 24, add lines 22 and 23. This is your total tax liability before any payments or refundable credits. Line 25 will apply any federal income taxes withheld from IRS Form W-2, 1099, and others. Add withholdings from 25A through 25C and enter on 25D. This is your total federal withholdings. Line 26 includes 2025 estimated tax payments and amount applied from your 2024 tax return. Income taxes are generally withheld from a taxpayer's paycheck. However, some taxpayers have income from self-employment, dividends, interest, capital gains, rent, and royalties. These taxpayers may be required to make estimated tax payments to avoid penalties. Line 27, earned income tax credit. Line 28, refundable child tax credit, attach Schedule 8812. Line 29, American Opportunity Credit from Form 8863, line 8. Line 30, refundable adoption credit from Form 8839, line 13. Line 31, enter amount from Schedule 3, line 15. Line 32, add lines 27 through 31. These are your total other payments and refundable credits. Line 23, add lines 25D, 26, and 32 for your total payments. Line 34 is the amount of taxes overpaid. Line 35 shows your taxpayer's refund amount. The taxpayer will have the option to have the money directly deposited into a checking or savings account, or they can choose to have a check mailed to the address on the return. Use 35B through D to input the taxpayer's bank information if requesting direct deposit. Line 36 is the amount of line 34 the taxpayer would want to apply to their estimated tax for the following year. Line 37 will report any amount a taxpayer owes to the IRS. Again, there are various options to pay, such as direct debit from checking account, mailing their payment to the IRS, or if needed, they can contact the IRS for an installment agreement. Line 38, any estimated tax penalties if applicable. That's it for the 1040. We know this was a lot of information, but we hope it helps you understand taxes a little more. Now feel free to start working on exercises in the practice lab using the sign-on information you created in training session 1. Sign into TaxSlayer. On the home page of TaxSlayer's practice lab, select Go to Practice Area to start your practice return. Refer to Section 4, Preparing a Return on the Practice Lab homepage to assist you in completing the practice problem. You have now completed the 4th of 13 VITA training sessions. All sessions are available on the Franchise Tax Board website at ftb.ca.gov. Again, if you have questions, please contact your local VITA coordinator. You may also reach out to FTB's VITA team at 800-522-5665 or by email at volunteercoordinator@ftb.ca.gov. Keep practicing. Thanks for watching.